Hi, and welcome to an RPM Telco webinar. Today we're going to be talking about commissions, specifically about SPIFFs, one-times, and adjustments. We're going to be mainly discussing how to track SPIFFs in RPM, where they stem from, or how they originate inside of RPM to begin with, and the kind of work we might have to do with those spreadsheets or raw commission data that we get from our suppliers before importing them into RPM. It's a little scary because we're going to be talking about pre-processing, which isn't great thing to have to do before we import our data in, but sometimes the data leaves us no choice. So we're going to be digging into that a little bit and going through some examples. And then we're going to be talking about how to get the work we did on those spreadsheets and importing them into RPM, different methods we can employ that you either haven't used yet, or you've already thought of it and haven't used. Just in case, we'll mention all of them. And then we'll talk about some commission groups and products and kind of what you can do and the benefits of tracking your products in specific commission groups. And it doesn't have to just deal with SPIFFs in that case. The commission groups can span to all of your different types of products if you have other use cases for it. And then finally, we're going to end on adjustments versus commission items, or more accurately, tracking adjustments as an adjustment to RPM or tracking it as a commission item. And we'll talk about why you'd want to do one or the other, as well as how to do one or the other. Yeah, I'm gonna take it from there. We'll start with SPIFF tracking. All right, getting right into it, we're going to be doing our first topic, SPIFF tracking. Kind of with SPIFF tracking, we really do want to be able to capture every single SPIFF that comes in. The pros of that are pretty obvious in being able to just better understand what makes up those SPIFFs one times, which can cause fluctuations in revenue, as well as be able to better identify when those large lump sums come in versus what's actually expected for like residuals, for example. And really, there's more pros in my opinion than cons, but really the big con of doing SPIFF tracking, or at least attempting to improve it, that we're going to talk about right now with some pre-processing and scanning some spreadsheets, is that it's going to take a lot more work upfront for the commissioning team. And your commissioning team might already be stretched thin. They might already be processing so many different spreadsheets that looking through some spreadsheets for certain line items just isn't possible. But there's lots of ways around that in terms of if we can identify what we're looking for, like if there's a pattern in a spreadsheet, we can do things like Excel macros to make it a little easier. But first, we have to really be able to identify, and it's going to be different per supplier, which is also a downside, or it's not really a downside, but a negative or a harsh truth, I guess, is we're going to have to look through every single supplier and figure out what makes SPIFF and what some suppliers label as SPIFFs and some others don't. But we're going to go through a few examples in this Excel spreadsheet that I have that I just whipped up. It's not like an example from a specific supplier or anything, but it's kind of just like a generalization of it. And it might be, you might find it on some supplier spreadsheets, you might not find it at all, but these are just things to like look out for those SPIFFs. And then we're going to be talking about how to import them and all that stuff. But we're first going to go into my RPM here. And then I'm going to drag my Excel file over so we can take a look at this. Let's see if I zoom in a little bit. All right. So for SPIFFs, you get them pretty much, we're at the mercy of the suppliers in terms of the data that they're providing us. So if a supplier spreadsheet just doesn't list out SPIFFs at all in any way, there's nothing we can really do in that sense other than maybe reach out to them and ask them for better data. Depending on how much revenue we're generating for that supplier, they might be willing to customize our exports for commissions a little bit, or they might not be. It really depends on each supplier. But if they're giving us the SPIFF data, but it's just in a way that's not really getting captured in RPM, like maybe you've noticed that you've imported a whole bunch of commission data and the SPIFFs never really come through. These are some examples that could be wrong with the spreadsheets, wrong in a sense with their spreadsheets, but not necessarily incorrect. Have to modify them a little bit, or hopefully ask them to send it to us in a better format going. But so this is going to be identifying what that format is and what changes we might have to make. But yeah, so my first example here is if our supplier was to give us data and the SPIFF itself was in here, as you see the SPIFF column, but it's all in one row. So this doesn't really work well in RPM because, as you know, when you're mapping your commission columns to RPM, we're only taking in that net billed and that gross commission column. So the amount billed to the customer and the amount we're receiving as the RPM subscriber. But sometimes SPIFFs will be in a column in here, and we need to get that into its own row, or we need to import the spreadsheet twice. There's two options in order to bring that SPIFF value in. So the first option, which is I feel a little more manual in terms of work, but it might give you a little bit of better data. So you'll notice also the product column is just listed as residual. So we want to maybe do something like this, where we copy that row, create another row of it, and we'd want to change the product to SPIFF so we can identify it once it gets imported into RPM. And we don't really need to move these values around. But if we didn't want to change the import matrix at all, we want to just import it all at once, since we're only mapping gross commission, we want to clear that out and then move this value over like so. And that way, when you're importing it, the import matrix, let's assume it's looking at these rows here. We're importing it in, and it's going to create two line items, one for the residual for the 100 and one for the SPIFF for the 900, since these are the only columns we have mapped in the theoretical import matrix that I have not created. But yeah, so that's a simple one. I don't know how often this one happens. I think I've seen it once or twice on some supplier spreadsheets. Not that I could name them because I don't remember, but yeah, that's kind of the most common, or not most common, but one of the easier examples, something we can actually work with and change and get it into RPM. But before we move on to another example, another method of importing this in, if this is a little too kind of work intensive, is we can sort, like assume this thing had a whole bunch of data in it. And we'll clear these values out. We can take the SPIFF column. Hopefully these are like all zeros or something. We can take the SPIFF column, filter it down to just values with a SPIFF in it, take all of this value out and move it into its own worksheet, for example, or its own spreadsheet, and then create another import matrix. Instead of mapping gross com here, for example, we can map SPIFF. And then after we import all the residuals, of course, you have to delete all the SPIFFs from your original spreadsheet. Actually, no, you don't, because they won't be in there because they're all part of the one line item. But you just have to make sure to select SPIFF and then import all of this in as a separate import after you do all your residuals. You would do another import for just the SPIFFs using another import matrix that instead of mapping gross com, it maps SPIFF and whatever other changes on that SPIFF spreadsheet you want to map. Also, before I forget, you want to change the product to SPIFF. So this is kind of like an example of pre-processing your data, and the way I demoed isn't exactly the one and true best way to do it. So whatever the mission team can come up with, RPM is flexible in the sense that they can take any column on the spreadsheet, and we just have to make sure that when RPM is importing data, it's just reading the columns that we map and then importing the rows of data in there. So we just have to format it in a way that makes sense. If we want to create separate line items for SPIFFs, for example, we would need it to be split out onto its own thing. Yeah, so I'm going to go to another example there. And this is an example of SPIFFs being on different rows. So this is actually a great example where this is actually super helpful. And the supplier has listed them out perfectly. Residuals being its own row here, and then SPIFFs being on its own row. This is super great. But let's play devil's advocate here and say that the supplier, instead of listing the products out properly, maybe it went through some weird thing and everything's just listed out as the main product for the account. And everything just has one product name, whether it's like residual or all products or whatever. And it's hard to tell that these things are actually SPIFFs. This is hard to work with because, well, it pretty much requires like a human eye to be like, oh, this was a SPIFF, or they'd have to be familiar with the account. Hopefully, maybe there's something in here like description, right? That could be like the actual product name, and then this could be like SPIFF. But say description wasn't mapped and we were just mapping these columns. Control, we're just mapping these columns. Not a great option here, or it's just not going to come in when we import it. So when we're looking at stuff like this, it definitely makes more sense to like not use this column and use this one. Downside of that is probably the description is going to have so many variations in the product name that it might be problematic. Like you might be dealing with thousands or hundreds of uh, product mappings or assignments every time you import a new spreadsheet because it just changes and have small variations. So maybe you do want to go back to this one, but then you can't really capture the SPIFFs. You get into the same problem there. So it really comes down to, again, manual eyeing of the data. So if the description is like this and it's okay to just use as a product, you can totally do that. But if maybe for some reason or another it's not a great option to choose the full description of a product and we want to just relabel things SPIFFs, it might require somebody to come in here and actually change this column to SPIFFs, or just scan all the descriptions, do a filter on it, and just kind of quickly look over all the options, assuming there's not like hundreds and hundreds of them, just finding those SPIFFs. Another thing I want to point out is that the net build and the gross commission values can sometimes help us identify SPIFFs as well. It isn't the greatest way to do so because, again, it requires somebody just looking at it. But for example, here on the row 4, where I have a net build of 0 but a gross commission of 900, sometimes supply that could mean that it's a SPIFF because the supplier just doesn't mark it as a SPIFF, but the way the commissions pay out on it and are displayed just screams SPIFF to us. So that's another way you can just take those, like filter by net build 0 and look at things with high gross comms or negative gross comms if it's like a chargeback, for example, and just mark those as you with the product name. Yeah, so the last example is going to be talking about, zoom in here, I zoomed in too far. All right, we're going to be talking about SPIFF combined rows. So this is kind of one of the worst examples, and it's just hard to deal with in terms of pre-processing. But let's say the supplier lists out all of the data, but it's all in one row and it's combined into one total column. It's pretty similar to this example, the first example, but everything's just listed in total column, and maybe for a long time now you're just importing like total commissions and it includes a SPIFF and includes a residual and it's combined, and it's just impossible to tell. If you're lucky, they might split it out into separate columns. If that's the case, totally awesome. We just do what we did in example 1 and we just create a separate row of data. We just drag down there, and then just go like this, and this one's our SPIFF. And then this one's our residual. Maybe replace that one or add a whole new row and just delete this row. However you want to manipulate the data. So that's kind of best case scenario, but say they don't have these columns and everything's just combined in total column. It's not too much you can do in that scenario. It's just all combined together. You pretty much have to ask them for a little better breakdown, them being the suppliers, breakdown of your data so that you can actually get the SPIFFs out. But now that we talked about kind of 3 negative examples, we can go back to like example 1 here and say that it was, instead of a SPIFF column, we just had something perfect like this. SPIFF upfront. So when things are marked, pretty much for RPM to identify it as a SPIFF, it needs to be marked with some indication in a column like product, where it's like upfront or SPIFF, or it could be bonus, whatever. Just some way that a person can be like, okay, this product is a SPIFF upfront adjustment, that kind of thing. And has it in its own row, and then have the SPIFF value in the same column as our total commissions, where it doesn't add it together and combine it. So every single line item kind of has its own line of detail in it. And yeah, In most cases, that could also be a negative, especially if some of you have worked with Lumen where they've broken it out a whole bunch of details for things that don't really matter. Like if they broke down all their different residual products or all like 10 cents or whatever, it ended up creating like 20,000 items for everyone. That's not great, but in terms of spiffs and upfronts, I feel like we're all on the same page where it should just be broken out into its own row of data. That way, when we import it into RPM, it's easier to identify. And yeah, so that being said, I showed a whole bunch of examples, but let's actually click into RPM here and go into import data. So as I was saying with the import matrices, so for like 8x8, for example, we can have a direct matrix that's just our normal residual import. And then we can set up another import matrix that uses pretty much all of the same columns, except that maybe I'll use a different column for spiffs, or maybe I'll use a different matrix altogether. Like maybe you want to create your own import matrix because you're just not getting the spiff data. Just make sure to make use of the ability to have multiple import matrices so that when you go to like upload commission items for 8x8, example, you can choose what kind of matrix you want to use so you don't have to constantly change the columns to match an existing one. You can just have multiple different column headers for each different spreadsheet and just choose the one you want to use when you're in. So if you're having trouble remember which one's which, I recommend giving it a good name, but you can also show the matrix to see all the columns. But yeah. So that pretty much covers it for the first part of this, and we're gonna move on to the second part. All right, now we're gonna be talking about commission groups and products in RPM, what they kind of are, what additional information they can kind of help with if we use them properly, as well as kind of what we're gonna identify, and then also being that you're watching this webinar, you're probably already an existing subscriber to RPM, so you'll probably have a whole bunch of commission groups and products in your subscription already. So we're going to be talking about how to move them around and better track them going forward, as well if it's worth the work to move a whole bunch of products into other commission groups or reorganizing your. So we're going to jump right into it. Back in my RPM here, and starting from the top, we're going to be going to the top left menu, schedules, and then we're going to be going into our schedules page for, in this case, 8x8. Keep in mind when you go to the top left menu schedules, it'll always default to the first supplier in your list alphabetically. And if you have a supplier with no commission groups in here, it could just mean that you're on a supplier that is not being, so you can just navigate to one with some commission groups to look through. So commission groups in RPM, for a quick recap, is just ways we group a whole bunch of different products into a group and then assign it a payout rate by pay plan. Now the products itself are generated when we import commission data. The suppliers pretty much control the name or product names, but in terms of mapping the data to your RPM, you have some control over which column you want to choose to create your products. So in some cases, you might have something very complicated, like if you track the service description, something, and you map that to your products, your product names might be way longer, have way more information in it, versus if you just tracked like a generalization of the products, it might just say residual, or it just might say spiff, or something simple like that. It could be a category, it could be a whole bunch of things. But if the products that you're tracking currently aren't what you really want to be tracking, where you can change that is by looking through your spreadsheets and making sure you're bringing in the column that you want to bring in terms of product naming. So the products in your RPM here, they can be moved around to a different commission group, but typically once you assign them to a commission group, you don't really move them around too much. It just pays out whatever you set the default to. And then when it comes to exceptions, generally you would just do it on the account level. But not to get too deep into this, you can also set exceptions on the product level. That's kind of what the commission groups are for in that sense. You could create another group and move that product that you want to create an exception for into another commission group, or you can do something fancy with tiers and that. But not to get too deep into those parts of commissions. If you have any questions about that, you can always reach out to us. what we're really going to be looking at here is the SPIFFs and upfront commission groups and how it kind of pertains to reporting on SPIFFs and upfronts in general. So typically, a lot of your suppliers, some of them or maybe all of them, don't really report SPIFFs and upfronts too well. I know that the product naming of SPIFFs and upfronts isn't the most consistent throughout all of the different suppliers. So what we can do to help with that is make it standard in RPM. So instead of having your SPIFFs and upfronts, for example, be inside of another commission group, like sometimes maybe in the past we would have said put everything inside of all products, just to, since you're paying like one rate anyways, you might as well as put all of your products into one group, so you don't have to manage a whole bunch of groups. Um, and that is simple for that reason. You might want to do that. But if you want to track your SPIFs and upfronts, it's good to create a group just for that purpose. Put your commission products into your SPIFF and upfront group and just make it same. No matter like the supplier naming of the SPIFs and upfronts, you can in RPM track it by commission group rather than tracking it by the product name. This product name, when it comes to like exporting all your commission data and looking through it, it's very hard to get that all lined up because of small variances in the name. So maybe one supplier names it SPIFFs with an S, one just call it SPIFFs without an S, or upfront with an S, that kind of thing without an S, and things like that, or up and then dash front. Those things make it very hard to take a large amount of commission data, export it, and then have something go through and be like, okay, these are all my SPIFFs. And not to mention that there could be products that aren't, to the human eye at least, known SPIFFs. Like maybe the product is coded in a character and a whole bunch of numbers. And at a glance, somebody who doesn't work in commissions or isn't too familiar with the spreadsheets from that supplier would have trouble identifying things as SPIFFs. So think about commission groups in that sense, where you can group a whole bunch of products together and standardize the naming. So if you did want to, say, combine a whole bunch of types of products, so like commission groups can be kind of like a typing. It's like, hey, these are all my SPIFs and upfronts. I want it to be called this. And the main thing you have to worry about in that case is if you go through like another supplier, for example, that your SPIFs and upfronts commission group name is standard across all of your different suppliers. Is that way when you go to export the data, it's all going to have the same naming scheme rather than it being a small variation for each supplier. So that's one of the main things we want to make sure we're doing for the commission groups, especially for SPIFF tracking. It's going to help down the line for sure when you're looking to export large amount of data or just get a good read on SPIFs and updates. But that being said, you might already have an existing list of commission groups that you're wondering, hey, could I take this and change it? You definitely can on a go forward basis. All you have to do is go into any of your suppliers, and you have to do this per supplier, which is a little time consuming, especially if you have a bunch of products. But there's not too much ways to avoid it. You'll have to look through your commission groups. For example, my residuals here, look through all the products and see, oh, there's this product in here, and you can even just switch it to all for an easier time to look through. So again, you can go to any supplier page, just go to this products tab, look through all of your products, and just scan and be like, oh, this is a SPIFF. It should be in the SPIFF/upfronts com group. What you can do then, pretending this isn't in there, you can click into that, just edit under info. Oh, sorry, edit under commissions, and switch the group out from residuals, for example, into SPIFFs and upfronts. And yeah, so you can, okay. Yeah. One quick thing to mention is you can also select don't pay on negative revenue. This is can be quite useful for your SPIFs and upfronts option. So if you set that, you won't do a huge negative to your agent's pay flow if that's a concern. Like if you want to absorb the SPIF and upfront to make sure that it's legitimate for a month or paying out, for example, or you just don't want to claw back or something, you want to handle on your own and don't have RPM automatically do it. Just keep in mind that if you do check that, on, it's just not going to pay out. So yeah, that's a cool little thing there. And then yeah, once you move all of your things into your SPIFF and upfronts commission group, just make sure your pay plans are set up correctly and your pay rates are set up correctly on the group as well. And if you're looking for any assistance on doing this en masse, or if you just have so much data, um, you want some assistance in doing it, just feel free to reach out to us. Because one thing to keep in mind is we at RPM can't really help in terms of looking through each product and identifying, hey, this should be a SPIFF, this shouldn't be. It'd be more like, okay, here's my list of products. I want to move all of these products from one group to another. That's something we can help out with, but not the actual identifying and scanning of the data to find out what's a SPIFF and what isn't. So yeah, that's a rundown of SPIFFs and how it handles with column groups and all that stuff. And yeah, we'll move on to the next topic. Oh, and one more quick thing before I forget. I also want to go and talk about default views. If you go to your top left menu into commissions and you go into like default columns here, what this helps with is you can set your default item views. So like for example, default item views are when you go to like top left menu, latest run, all items, or if you were to go into say like customer or an account and you viewed commission items, that's your default item view. So it's really useful to make sure that your default item view includes all of the information that could help you identify things at a glance. So for example, you can add a column in here, go into like commissions. A nice one to add is like sales commission by gross com percentage, right? That's a pretty common one that isn't on there by default and could be quite beneficial to help somebody figure out the percentage rates. And then again, since we were talking about commission groups, com groups is a great one to add in there. Appendix of products is where I like it, and then sales com. Yeah, so if you hit OK here, and then we were to go to our default item view, so latest run, all items, you'll notice that those changes have taken effect, and it just really helps with um, cutting down and having to make like a custom view every time you want to look at data or looking at one of your saved ones. Just saves a click, especially if it's just something you always want to see. So yeah, quick heads up on that one. Now we'll actually move on to the next topic. All right, moving on to the last topic of this webinar, we're going to be talking about adjustments in RPM. I'm sure a lot of you have worked with adjustments before and added them to compensate your sales partners, your agents, to do like SPIFFs, upfronts, one-times, clawbacks, things like that. But there are multiple ways to add adjustments other than adding adjustments in RPM manually versus like doing an adjustment import. There's also another option of creating it as a commission item. And we're going to be kind of going over why you want to do that, the differences between the two, and yeah, and then kind of talking about how to even start making them and kind of some tips and tricks I have around it. So jumping right into my RPM here, we're going into the top left menu, latest run, and we're going to be talking about adjustments first, and everyone's kind of familiar with the adjustments option at the bottom. But if you're not, this is a way to be able to add a quick lump sum payment to an agency and relate it to a supplier. And you could do this for anything, and you'll notice in here I have one for a true up to an agency called ABC Agency from AT&T. The reason I put it in here was because of a missed payment / incorrect commission rate. And then I threw in the account and the customer name in here in the note. And you'll notice the reason that the account in here and the customer is in the note section of this is that, or you worked with adjustments before, they do not relate, the adjustments themselves do not relate to an account or a customer. If I edit this adjustment, there's no selection in here to choose an agency, or sorry, to choose a customer or an account number. But you can pretty much just choose supplier, the agency it goes to, amount, and yeah, you'll notice, just do a quick recap on adjustments. You can also choose like a pay rate from the agency's pay plan. In this case, it's all zeros. But instead of having to do the math manually, if you just know, hey, it's a chargeback, they should just get their regular residual rate And you can just put in the gross com, so the amount of the account billed for that month. Click on this little arrow, and I'll just apply this percentage to your gross com to calculate the sales commission. So yeah, so on that, note for staff only goes to our notes for internally, and then the note here the agent can see. That's where we kind of want to put the account number and the customer if it relates back to an account and a customer. So the downside of an adjustment is that while they're very quick to add an RPM, they do not relate the information back to an account or to a customer. So if the agent wanted to like maybe see a history of the customer, they'd have to actually just look it up in their RPM or through their spreadsheets if they don't have access to the agent login in RPM. Or they'd have to like look up the account number. So with an adjustment, there's multiple ways to add it. You can do it through the import here, so you can add a whole bunch of adjustments at once if you need to, or you can just manually add an adjustment through the button here. So that's adjustments. So the alternative to adjustments that probably isn't used too often or as often, I'd say, is the ability to just add a commission item manually. And while you can actually do this through a commission import, like you could just create your own commission import spreadsheet and import a whole bunch of commission items that represent adjustments. So what you can do is you can create an Excel file with your own desired column headers. You still need like customer name, account number, product, for example, net billed and gross commission. And then you just create it as like a multi-supplier import spreadsheet. So that way you can import it into every single supplier from one spreadsheet. So you don't have to create one per supplier. And then you just create rows of data that represent those adjustments, just like you'd kind of import adjustments in. But instead of importing it in the adjustments page, you'd import it as items. So it actually creates the items, relates it to the customer, relates it to the account, and then applies whatever the gross commission is to the item. One thing to keep in mind is if you're importing it as an item, it follows all the same rules as commission items. So if you create a product that doesn't exist yet, it has to be assigned to a commission group, and then it's going to follow the exact same pay rates as you already have set up for that account or for that agent, depending on your commission rules. So that's kind of why it's a little more complicated. But before we get too far into like the spreadsheet itself, we're just going to go to the simplest route of clicking add an item manually. And this is good if you need to make like 2 or 3 adjustments or 1 adjustment, and say again AT&T. And here you'll notice that the selections are a little different. You can actually choose an account number. You're actually forced to choose an account number. You have to pick an account, and it will automatically select the customer related to that account number. So when you're making these adjustments, you have to know ahead of time what the account number is that you're making the adjustment for, not just the agency and not just the supplier. So it has to be a selected account, and you'll notice you can't add an account from here. So again, it's way slower to use this if you need to just make a lump sum amount that's not related to an account or customer. You pretty much wouldn't do this unless you had an account in mind that you needed to do an adjustment for. So you choose the account number, and then there's another option here where you choose like products. The products in here, you can choose like an existing one, but this is a list of existing products from the supplier AT&T that it would show up and pretty much reference your product list. So you'd have to add a product, say if a SPIFF or an upfront doesn't exist in this dropdown and you don't want to select like an actual product, we want to give it its own thing like SPIFF or an upfront value. You would have to go and create the product. And how you can do that is if I exit here real quick. So if you were to go to a supplier and you go to like AT&T, for example, you can click on this products tab, and then you can add a product in here. So if this was a supplier that only had a few products and it didn't have the product we want, you'd have to actually add it in here. You'd have to assign it after you add the product. Let me just add one, for example, SPIFF2. Assign it to a commission group, and okay, and that's it. So that creates the product, and then when we go back to latest run, add an item manually, AT&T, choose a random account, that option will then show up in here. So yeah, account, customer, rep, agency, products, all of these like assignments are done outside of this page because this is just creating a commission item, whereas the account number, the customer, and all that stuff is created in their own respective pages, or which is why I kind of recommended if you need to create a whole bunch of these at once, it's maybe a little easier to create a spreadsheet and import the commission items. Because as you know, when you import commission items, it actually creates the accounts and the customers and the products for you if they don't already exist. So you don't have to click around in RPM to create them. You can just create them using import. But one big warning for doing it that way is if you misspell a customer name or you misspell an account number, you're going to create another new customer and a new account that might not be what you want to actually reference, in which case you kind of get a problem of, oh, we made this true up or this adjustment for you, but we misspelled the customer name and it made its own customer and it made its own account number, so you can't actually relate it back to the original account and customer. So just be very careful when you're creating manual line items outside of RPM with an import. Just make sure that it matches the account and the customer name. I even would go as far and recommend downloading the account and customer outside of RPM. So if you were doing like true ups or adjustments for whatever reason, you download the list of the account and customers out of RPM from the accounts page, and then use that page to kind of copy and paste the account number and name of the customer into your spreadsheet. Yeah, other than that, the money values are kind of just like the adjustment page. You just put in a value in here, put in a gross commission, and then you'll notice the sales commission option here where it says calculate normally. That just means it'll take whatever my agency and rep pay plan is and apply it to their gross commission. So if Pat Rock here was getting 10%, it would just automatically calculate using the commission rules that I already have set up for this account number. It still takes into effect like account groups and all that stuff. You're just still making an item in RPM and is still applying all the normal commission rules that you would apply to it. But you have the option to adjust the item. Say if this was a true up for whatever reason, and well, normally you can just put like a negative 100 and calculate it, subtract the amount from. Or if it's a true up and you want to give them a different rate because you mispaid them, for example, you can make two items, one to subtract the original and then one to true it up to maybe instead of 10%, you're supposed to get 11. So you can adjust the item. I don't really recommend adjusting the item through here unless it really is a one-off scenario. Like if you set a commission rate wrong, you should set it and change it on their pay plan going forward so that it doesn't continue to pay them incorrectly. And then you can just use calculate normally because it'll just apply the new rate that you set on a go forward basis. So instead of adjusting the item, I recommend you adjust the commission rates outside of the item itself so that it takes effect all over RPM rather than just one specific item. So yeah, so that's how you add items manually. And again, the real reason you'd want to do this over doing an adjustment is if you wanted to relate a commission item to or adjustment amount to a customer and to an account number. You see this items created, and if I was an agent and I came in here, I could click on the account number and it'd take me to the account and I can see the full history of the account. If it was like customer, I can do the same with the customer and hit history and see all that stuff. So yeah, that is pretty much it. That's all I wanted to really cover for this webinar, and I hope it was informative. If anybody has any questions or want to follow up with me on any of these small details or like my scenario is a little different, how can I make it work? Very happy to help do that, but please reach out to us at support@rpmtelco.com. And I hope you enjoyed this webinar and will like to see more of this in the future. Thanks a lot. Have a good one.